everyone, Les here from BG Trading and I hope you are well. Today's 24th of July, 2023 and I'll be talking about Core Lithium, which the SX code is CXO. This is a stock that we have been holding a large position and today, unfortunately, and by the way, this is type of video that I really don't like doing, but I have to because it's part of what we do here and is a part of our mission to disclose and to make people understand why it's so important taking stop loss. So essentially, we took stop loss this morning on Core Lithium, 79 cents. This is unfortunately a trade that didn't work out, although Core Lithium has been incredibly profitable back in 2021 and 2022. This year, obviously, there's a change of trend, and obviously when there's a change of trend, we better off take precautions and mitigate potential risk of further downside. I'm going to explore in this video why we have taken stop loss, why we take $12,000 stop loss, unfortunately, and why we decide to seize our exposure, in particular in Core Lithium, for at least for the short term, and not just about the fundamentals itself, but also about macroeconomics a little bit, and also what's happening with China, particularly what's happening in China. I'm gonna talk about a little bit in this video. So let's have a look. Before going forward, just remember, this is not a financial advice. Just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, how we set up stop losses, how we avoid FOMO, and much more. So make sure you subscribe if you like it. I'll be putting also details of our free Facebook community we call Buy, Grow, and Sell Strategy for Share Traders. We post a lot of great quality content, including some stock analysis, some of our latest results here. We've been doing well with tech stocks, so EML, Tyro, Webbit, Nano as well. So some stocks that we are doing well. And some stocks, obviously, we have to take stop loss. This is part of trading and understanding the shift of the money that going from material stocks like EV stocks going to potentially now energy stocks, tech stocks, as part of the shift in the macroeconomic cycle. Okay, so what's happening with Core Lithium essentially here was Q4 FY23, a quarterly update. Was released in the market today, and we've been bullish about the stock, obviously, otherwise we wouldn't have been holding the stock. We thought we even tipped for Core Lithium to go to its all-time high, but unfortunately most of the metrics, not fundamental metrics really, but most of the macroeconomic metrics has been not helping that to happen. And unfortunately the company, although there was a lot of positive aspects here, like a strong balance sheet with $152 million cash in no debt, some secure offtake agreement with Ganfeng Lithium and Yahuan, and also some really strong ramp up production from spodumene concentrate production from 3.5 tons in Q3 to 14.6 tons in Q4, but unfortunately that wasn't enough. And the reason it wasn't enough is because while we're expecting to be positive, which was the guidance, we thought Core Lithium really would nail on the guidance, it came lower than expectation, and then obviously triggered a sell-off. Although it's still not too bad. It's still better, by far better than holding speculative stocks on the Lithium Explorer. This is a producer, right? But I think in the short term, we could see further degradation on the share price before sort of bounces back. I'm going to be talking about the technical aspects and my projections for the share price in the short term, and two different scenarios for the share price that I believe was going to happen in this video. So this will be the second part of the video. So the first part here, obviously the guidance, this is the problem here, because the FY24 production guidance is between 80,000 tons and 90,000 tons of spodumene concentrate at the C1 calendar year, cost between 1,165 and to 1,250 per ton, which is, as they say here into this report, it is at the lower end of the production expected, and then also a higher cost, and that is to do with lower purity on the spodumene that was initially stated on the feasibility study. On the DFS, we come up with a lower purity, and then obviously that will take more time for the company to figure out how to increase its purification, purify the lithium output, and then obviously bring back to the market what it was expected on via DFS. So look, it's still by far more positive than other companies' fundamentals, but in the short term, it could have some further downside. Now, the key problem here, apart from the lower guidance that we were expecting, is the lithium prices. Lithium prices has been falling over the last week, and unfortunately across most of the lithium markets and index. So you saw like a lithium carbonate 99% battery grade falling, like from June 26th to July 24th, pretty much was held back for the whole almost the whole July here, but then it starts falling again, and nobody really knows how deep it's gonna fall. That's the problem. And you see like lithium carbonate 99.2 industry grade also falling, as you can see. Pretty ugly chart. Then lithium carbonate index battery grade also falling. So pretty much all the index falling at the moment. And then obviously when that happens, that really compromises the stock price for this particular reason. But the key question is why lithium prices are continues to fall if most of the research, market research out there are pointing for huge demand of lithium. And that is to do because China is doing everything is necessary, huge efforts to boost the input of material production in the long term. And that is a key problem. Easy buying competition from battery manufacturers and reduce short-term risks, though they really pumping, and that's and that particular thing has been felt not only in lithium prices but also graphite market as well. We saw graphite stocks falling, and then now obviously lithium falling in there. So even though net EV car sales in China was up 25% in June alone. So there is still at least a short-term fear that the long-term output of battery materials will start coming down, and China will keep flooding the market with more products. Okay, so this is the problem at the moment, and obviously looking to the chart formation, which we're going to be seeing now. So here's core lithium now. So our stop loss was at 79 cents right here. We obviously decided to take the stop loss, unfortunately, but we want to protect our capital. So this huge red candle on the Heikin Nash shows, and a huge volume shows that we could see, could see a further downside from this stock. And this is a huge bearish intersection level 2. And also we had a bearish intersection level 1 down there. So 2, but 3 actually, 3 indicators from BGS20 that we should get out of the stock. Now, 2 scenarios here, okay? First one is we saw the share price hitting in March. We saw the share price hitting like 72 cents. Okay, which is pretty much what is now at the moment. So we show the price at 72 cents here, and if the stock bounces at this particular level, then obviously we could say that it was a double bottom right there. But my look for the size of this candle and this particular volume, I would dare to say that the target now for me is it could be well at 60 cents or below. So we'll be looking between 60 cents to 50 cents. Unfortunately, we could well see core lithium worth 50 cents in the next few weeks or or the next few months. Even if we see a bounce back here, I would probably wouldn't be attempt to buy back this stock in the near term until I see a huge reversal. This is the reason we decide to sell that today. And not just because the macroeconomics, but every single aspect is pointing for a potential further downside. Also, if you look into the leading companies as well, leading ASX producers, Pilbara Minerals, which is the ASX code is PLS, it's taking a huge fall today, 5%. Look, this company is very profitable, but it's taking a huge fall, and this huge candle also suggests that we could see further downside potential, even bringing Pilbara Minerals back under the SMA 250, which could come around $3.50 again. And Oken Limited, that has a recent breakout its hypothetical resistance, also falling towards $15, and we could see Oken Limited falling towards $12 or even $10 if things start degrading, if lithium prices continue to go down. So now back into core lithium, when we place our entries, when we buy a particular stock, we always highlight the potential risk. And this is a huge risk, obviously. The lithium prices, if lithium prices collapse, which it's not collapsing yet, but it's going down consistently. If the lithium price goes down, then that's what happens with the stock price. It will go down as well. Doesn't matter if the fundamentals are positive. Again, the fundamentals for core lithium was good, but not as good as expected by the DFS. And unfortunately, that has triggered a huge sell-off today, unfortunately. So for us, it is a sell. I'm not going to be holding that at all. I just decide to take the stop loss and hope this bounce back for those shareholders that are keep holding the stock. So we think there's more money now going towards tech stocks, potential some retail stocks, although that we might have a recession coming ahead. But lithium stock and material stocks are pretty tricky at the moment. We better stay away for now. Hope this video was informative. Let us know what you think. Let us know if you are also taking loss, or if you're going to be holding for a long time, or if you're not holding at all. I'm always delighted to see what people are doing on the stock market. Thank you very much. I'll see you in the next video. Bye.